Hello and welcome to traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is the 1st of March and we're starting from euro-dollar pair with Jakub Novak. But first, let's have a look on 5-minute chart for analyzing yesterday's transactions. The test of 1.0598 occurred when the MACD line was just starting to move up from zero, which was a good signal to buy. It resulted in a price increase of over 35 pips. No other signals appeared for the rest of the day. CPI and GDP data from France prompted a rise in euro-dollar pair on Tuesday morning. However, dismal US consumer confidence data return demand for dollar has returned, indicating the presence of big players in the market looking to strengthening safe haven assets in the face of interest rate hikes by central banks. A number of reports from Germany are expected today, all of which may both strengthen the euro and weaken it. February PMI for manufacturing in the eurozone will also lead to a spike in volatility, but it will be difficult to determine the path's further direction in these conditions. The US ISM manufacturing index report comes out in the afternoon and it's likely to remain below 50 points. However, given how the pair reacted to the negative statistics yesterday, it's also difficult to know what the reaction to the ISM data will be. For long positions, buy a euro when the quote reaches 1.0614 and take profit at the price of 1.0640. Growth could occur, but it will only be in upward correction after strong eurozone data. Nevertheless, make sure that when buying, the MACD line is above zero, or is starting to rise from it. Euro can also be bought at 1.0590, but the MACD line should be in an oversold area, as only by that will the market reverse to 1.0614 and 1.0640. For short positions, sell euro when the quote reaches 1.0590 and take profit at the price of 1.0555. Pressure will return if there is no support at the daily highs. However, make sure that when selling, the MACD line is below zero, or is starting to move down from it. Euro can also be sold at 1.0614, but the MACD line should be in an overbought area, as only by that will the market reverse to 1.0590 and 1.0555. Pivot points as a lifestyle. Evangelos Poulakis is describing how to trade GBP-USD pair. The pound-dollar pair stayed within the range of the candlestick formed in January. This led to uncertainty on the monthly time frame, which resulted in consolidation. Bears will need to move beyond the monthly Fibonacci June level of 1.1842 and test the next support level represented, for example, by the levels of weekly Ichimoku cross 1.1648 and 1.1401. The main goals for bulls today is to pass accumulation of resistance levels of 1.2100, 1.2144, 1.2232, and 1.2302 found on different timeframes and break above the monthly candlestick of 1.2447 that was formed in January. At the moment, the pair is trading near the key levels of 1.2030 and 1.2058, daily central pivot level plus weekly long-term trend. Consolidation near these key levels shows that none of the forces is in control of the market. Gaining control of the key levels and trading below them will intensify the bearish bias. If so, the main downward targets for the day are located at the support area formed by the standard pivot levels of 1.1973, 1.1930, and 1.1845. Consolidation and trading above the key levels of 1.2030, 1.2058 will mark the prevalence of the bulls. In this case, the upward targets are seen at the standard pivot levels of 1.2101, 1.2186, and 1.2229. Here is technical analysis of intraday price movement of USD CAD. Area of Knockmore presents. If we look on the 4-hour chart, the loonie, then there will be two important things. The appearance of the bearish 1, 2, 3 pattern, and there is a hidden deviation between the price movement with stochastic oscillator indicator. Based on two things above, as long as USD CAD back to break above 1.3658 on the nearest time, has the potential to go down to test the level of 1.3533. If this level successfully broken, then level 1.3440 will become the next main target to pursue, and level 1.3356 will be the second target to test later. Finding resistance zone for gold, Petar Yakimowicz describes. Gold has been trading upside this morning, and we find the rejection of the Fibonacci confluence at 1837, which is good sign for further downside movement. Due to the bearish divergence on the momentum oscillators and rejection of the Fibonacci resistance, Petar sees potential for the downside movement towards lower references. Downside structural objective is set at 1820. Stochastic and MACD oscillators are showing fresh downside cross. Which is another good sign for further downside movement. Key resistance is set at the price of 1837. At the end of the row, here is Laurie Bailey with USD GPY pair focused. Amid the dollar index's rise by 0.33, the USD GBY pair avoided falling towards the support of the embedded hyperchannel line with the 134.00 mark. The day closed at the opening level. This morning, the price is trying to continue rising. It's aiming for 137.75. The Marlin oscillator is decreasing. It's an obstacle to growth, but this decrease can be interpreted as the oscillator discharging before it grows further, which, however, does not completely eliminate the risk of reversal. On the 4-hour chart, the indicator lines remain in force. Yesterday, it stopped declining and turned upward before touching these lines. The signal line of the Marlin oscillator reversed from the support of the zero line. These are signs of growth. Signs of a reversal into a correction is the price converging with the Marlin oscillator. The convergence is weak, but if there are any catalyst, which is unlikely yet as the US ISM manufacturing PMI for February may show an increase from 47.4 to 48.0 today, it could materialize with all its hidden potential. A technical first sign of a reversal would be for prices to move below the MACD line, below 135.73. That's all for today. See you online soon. Good luck.